All right, well, let's go ahead and get this going today and get started with a presentation. First of all, thank you for jumping on today for Lending 101, presented by the Kansas SBDC at Wichita State University. I'd like to thank Marcia and her team out there for having me on today. They're a great resource there in Wichita and really enjoy working with them a lot. My name's Vincent Haworth. I'm the director of the Capital Access Center, and we're a subdivision of the KSBDC. We specifically work with clients that are part of the SBDC system, and we really work specifically hand in hand with the advisors and directors to work with them on capital needs for our clients. So we have two of us that handle the state of Kansas, and we're only one of 3 capital centers nationwide. So we're really lucky here in Kansas to have this resource. Both of the capital partners here, the two were former bankers. So we actually work for you now, not the bank. It's something that we really enjoy a lot. I'd like to, before we get started with this training, I'd like to just go ahead and tell everybody that we really want this to be an interactive training. Oftentimes the getting financing and capital for your business is often probably the biggest obstacle people run into. You may have the best idea in the world, and sometimes it's really difficult to get that financing that's needed. And talking to banks and bankers can be can be a little intimidating. And so we really want you to have questions ready. Don't feel like you can't ask any kind of questions. Before I got into banking, I was in the music business of all things. So when I started, it definitely, when I started with my banking, it was really difficult to find a lender who understood what I did. And some of the questions that I asked just didn't seem to, at the time I look back, I felt like they're really stupid, but you don't know what you don't know. And so I want to just encourage you guys to, this is a free forum. We'll be monitoring the chat room. You can speak up and we'll answer your questions right there. We'll also have a little bit of time at the end for a question and answer. And of course, my contact information will be there at the end. And you can always call me or email me or talk to your WSU KSBDC. And one way or another, we'll get your questions answered for you. So we're just going to go ahead and get started here. Again, welcome to Lending 101. And there's a lot of financing options available, but bank financing is typically the most common. And these are some of the things that we're going to talk about today. So what does a bank require? I will tell you that every bank has a general idea. They're all going to ask for certain items. But it can vary from bank to bank, and especially when we're talking about the state of Kansas, you could be in Wichita or Kansas City, and the same bank may have different requirements. So we're going to talk a little bit about that. I would say, when you're out there looking for financing for your business, choosing the right bank is such an important part of that. I think a lot of people don't really realize how important that is. And we're going to kind of talk about the differences between the banks. If you've ever, you go down in Wichita and you go down Douglas and or in Kansas City, there's, banks on every corner. And, before I got into banking, I was like, why are there so many banks? Well, they all kind of do something different. They all have specialties. And so if you're looking for a bank and you're in the restaurant business and this bank's never done a restaurant loan, it's probably not going to be a good move for you to try to go there. It's probably going to be a very frustrating experience, but we're going to talk a little bit about that. There's local versus national banks. So there's positives to each. I would say the majority of us are probably going to be in that local community type bank environment. We're gonna kind of compare the two and kind of go there. And then I will tell you, being a lender for 20 plus years, I think the biggest thing is your lender experience. Do they get your business? Do they know what they're doing? Especially if they have an SBA. If your loan's an SBA loan, have they ever done an SBA loan? It would be amazing. All lenders are not created equal. I will tell you that. So we're going to talk a little bit. How do you find a good lender? That is a big thing right there. How do you find somebody? And then we're going to go into credit basics and lending programs. But one of the things I want to talk to you is, how is a credit decision made even? You sit there, and for some of you who may have already been through this process, at least momentarily, you're thinking, well, you're not really sure how it's made. And that can be a frustrating experience. And it can also play into whether or not your loan gets approved or not. Because there's different ways that loans decisions are made. And we're going to go through that when we go through the banks and local versus national. We're going to kind of talk about that too. But it's always helpful to know who makes the lending decisions, how they get approved, and what the process is. So we're going to go through those as well. So lots of things to cover today. First of all, so what does a bank require for a loan request? Each bank will have a specific set of required, but there's typically a core set of financials that they're going to want to see. Every bank's going to have their own application, and you'll have to get that from the institution, but they also have, they're going to require a personal financial statement. And for those who may not know what a personal financial statement, it is basically a rundown of what you owe and what you own. And it's really important to list everything on this statement. There's things in there that could help a banker come to a conclusion of whether or not we can get a loan approved or not. And we won't go over this particular form, but I will tell you, a lot of people do not fill this out completely. And it really is important to do that. You'll need 3 years of complete personal and business tax returns. If it's a startup, you'll need a business plan and projections covering 3 years. To talk about our SBDC here, the SBDCs do a terrific job helping our clients through that business plan and projections. Obviously, if you're doing a startup, you wouldn't have business tax returns, but if you're acquiring a business, then that would be a case where you would need those. You'll need a current and previous year income statement and balance sheet. So the income statement is also known as a P&L, a profit and loss. You'll hear this terminology in different places. Different people use different things. I like to say income statement, but you'll hear P&L and profit and loss. So, and also the balance sheet too. Obviously, these two items would be if you were acquiring a business and they're already operating. But a balance sheet basically lists out your assets and liabilities of the business. And a lot of people think it's all about the income statement. And while that is true, there's things in the balance sheet that the bankers really utilize that can actually help get a loan approved, or they may see some issues within the business. Accounts payable and receivable reports. Those are just basically ways of saying, okay, who do you owe and who owes you? So again, if you're acquiring a business, those would be something that you would need to get. This set of documentation along with the lender conversation will typically be enough to see if a bank has interest in what you're wanting to do. A lot of times this is what they call a discovery call, pre-flight meeting. And one of the things I really want to stress is that bankers are generalist lenders by and large. So they do a little bit of everything. And you have to really be prepared to go in and talk to a banker about what you do. We're going to find out the reasons why here pretty soon. but you really have to be able to tell your story, especially if you're a startup business. You have to be able to answer those questions. This lender is going to be the person who's going to be representing you, and they have to have all the information available um, for them and for the bank to make a credit decision. I'm going to pause right here real briefly to see if there's any kind of questions. I don't see anything in the chat room, but I want to give an opportunity between slides to make sure that there is a chat here for. Okay, I think everybody seems to have a pretty good handle on that part. Evaluating your loan request. Every lender is taught the 5 C's of credit, and we'll use this one in evaluating your credit request. This is an excellent way to kind of guide you of whether or not you have a bankable deal. Well, they call this this is the very first thing as a lender you're taught is the 5 C's of credit. And this is something that every banker is going to look at your loan request and they're going to ask themselves these 5 questions. Now, not necessarily in this order, but they definitely will do this. And I will say the very first thing that they always do is how are you going to pay back this loan? Um, Obviously, the banks are a for-profit business. They do not want to, um, they they can't afford to take a loss. So the very first thing we want to know is how are you going to pay it back? Um, they want to make sure they get paid. Is it going to be through business cash flow or personal, or is it going to be a combination of both? And that's going to be the number one question that they're
Hi,
going to
Vince. I think we have a question from the audience.
ask. Okay, sure.
So it's how hard is it to get a loan when you have been closed for 2 years due to COVID and health and ready to start back up again? Do I have to do the business plan again?
That's a great question, and that's pretty timely, really. When you think about number 3 down there is conditions. What is the economic climate? And within your industry, this kind of goes along with that 5 C's of credit. Obviously, we just got out of COVID. Uh, this is a rough time period, right? Some businesses did okay through COVID, some of them thrived, but I'd say the vast majority really struggled during this time period. And that's why you saw the PPP loans and EIDL loans that the government provided. Um, to answer that question, it can be a little bit rough. Um, COVID and those type of things are still fresh in the minds of bankers. And if it was me, I would do another business plan and I would focus too on how you would overcome if something else happens similar to this. Because the reality is there may be something else down the road. Whether it happens, we don't know. But the bankers are going to want to know how are you going to adjust to something like this down the road. I think about some of the restaurants that were sit down restaurants, and obviously they're the ones that took the biggest hit, but a lot of them pivoted. They started carry out, even though maybe that was something that they didn't do previously. And some of them adjusted well, some of them didn't. And so I would do a business plan. I think that's a great question. And I would try to show in your business plan how you were going to mitigate another instance if this was to happen again. There's nothing wrong with, hey, no one could have predicted this, right? I mean, this was a once, in a lifetime event. But I think it's a good opportunity for people to kind of come back. Okay, I learned from this. This is what I learned. This is how we're going to pivot next time. While we're kind of on that subject, there's 2 things that if you're talking about business plans and coming back in, There's two things that are top of mind for bankers right now, and I can guarantee you will get these questions regardless of what industry you're in. One would be staffing. They're going to want to know, can you get staffing? Is your labor cost going to be in line? Are you going to be able to make money with the new labor uh, variables that are coming up right now? Can you even get staffing? I mean, I think we all see it every day. I see right now in the hotel that I'm at. There is staffing shortages. How are you going to overcome that? The second one would be supply chain issues. That is a huge hot point right now for bankers. We're working with a startup boba tea thing, and I'm like, you need to have at least 3 to 4 vendors that you know you can go to make sure you get supplies. If you don't have supplies, you don't have income. You don't have income, you don't have a way to pay back that loan. So the bankers are really going to focus on those two things. So that was a very timely question. We'd be happy to help with that, but I would certainly do a business plan and I would focus on those items. Great question. I hope that helped. Okay, I'm going to go down. Capital. How much equity will you be investing, also known as skin in the game? There's a lot of different programs out there, and unfortunately, we're not all blessed to be able to bring equity to the table. If you are, that's great. There's programs out there such as the SBA that'll allow you to do as little as 10% down. There's some things that you can do. On top of that, there's some matching programs. I will say that at the end of the day, the banks are still making the credit decisions, even though SBA may allow 10% down. The bank can still ask for more if they don't feel comfortable with the project. So that's something that I think a lot of people don't realize. If we look back at 2008, a lot of those loans that went bad is ones where they didn't have anything invested into to the loan. It was easy for them to walk away. And so since that time period, the banks have been very sensitive to skin in the game. And they're going to say, well, if you're not putting anything on the line, why should we put something on the line? And I'm not defending the banks, but that's exactly what they're thinking. And so when they look at that, they want to see that you're invested into the loan as well as they are. Conditions. So we just kind of talked about that. This is definitely an unprecedented time. The whole time I've been in banking, I've never seen conditions like this before. On the flip side, we've had a lot of people. It kind of was one of those things that reevaluating your life. Do I want to work for somebody? Now, a lot of businesses laid off people, closed down. Do you want to control your own destiny? But what I would say is, look at the business that you're in, and is the conditions right now right for you to start your business or acquire a business? If you're, I would say 8 months ago, probably acquiring a restaurant, I don't know. But if it was a drive-through restaurant, maybe so. I mean, you look at Hawaiian Brothers and Canes, and they thrived uh, through the pandemic, while others didn't. So you look at recreational facilities during that time period, they really took a hit, unfortunately. And so I would look at it like that too. You got to ask those questions. Is this the best time for me to do this particular business? Character. What are your qualifications and credit history? Uh, these are really being scrutinized, folks. So when they're talking about qualifications, they're really talking about industry experience. I used to have people come in all the time, wanted to open up coffee shops, and it's like, well, I really want to open up a coffee shop. I got my severance. I want to open it up. And one of the first things I would ask them was, okay, have you spent any time in a coffee shop? Do you know how to run a coffee shop? I go to coffee shops. They're always busy. Well, that doesn't really cut it. It's a really difficult business to be in. The margins are really slim. There's a lot of competition out there. So if you're gonna want to open up a coffee shop, then you should go work for one, or you should have someone in place that you're guaranteed can run that place for you, and that would be what we would call a key person. A good way to get around that part of it is franchises. Franchises are a great way to go because you're not reinventing the wheel. They have a model, it's turnkey. Um, they can come up with, you name the stat, they'll come up with it. And typically, a lot of them do due diligence. They don't want to go into markets that won't be successful because it damages the reputation. I took a teacher who taught grade school English, and she opened up two firehouse subs. She's great at it. One of the secrets was is that firehouse subs did a terrific job. They had a great training program. This is a way that you can maybe overcome some of your qualifications, or if you have if you have experience that's relatable to the particular business, where it would transfer your skill sets. Uh, Collateral. What assets will you pledge for a loan? Sometimes you don't have any assets, right? I'd say that the major asset that most people have is your home. And if you are going through SBA, you have a $350,000 or more loan, and you have the available equity in your home, and you have a collateral shortfall, well, you're going to have to put it up. And
Hi.
yeah,
I think we have one more question for you.
okay.
And Erica says, will banks or lenders consider my retirement savings 401k IRA when evaluating my credit, or could it be used for collateral?
Uh, I'm sorry, I didn't quite get the whole question. Let's see. Okay, well, banks, lenders consider. Oh, okay, I gotcha. Yeah, well, there is a tricky way to do this. The short answer is yes. There is a program out there where you can convert your IRA into funds to be used for a business. Now, they won't use them for collateral because you can't do that. But you can convert those funds into what they call a ROBS program. And you can use those funds uh, to fund your business without penalties. It does take a professional to set that up. I will say that you do need to be very cautious when going that route. I mean, you have to really think about this. There's a possibility you may not be successful in your business, and you may lose that retirement funds. So that's something you really have to consider. But the short answer is yes, you can definitely use that, but no, you can't use it as collateral. Now, stocks, on the other hand, is a different story. You can use stocks, but it can't be a 401k. Typically on a stock collateral, what they'll do is they'll take 50% of the value of a stock. So if you have $1 million in stocks, they'll loan you $500,000 on it. And that's a pretty typical loan percentage that a bank would loan on that. Hope that answers your question. That's a great question. Collateral. As I was saying about the house, typically this is kind of where maybe, so this is something that we talk to our clients about pretty quickly. If we discover in their personal financial statement that we see there's available equity within their home, one of the very first things that we do is talk to them about this. Now, the SBA requires it after 350 and collateral shortfall, but you have to also realize that the banks are still making the credit decisions. So you may have a $150,000 loan. that maybe just short of collateral, being fully collateralized, or maybe it might be fully collateralized, but guess what? The bank can still ask for that home equity to secure a second lien on your home. Again, they're making the credit decision. So they can do this. And then oftentimes this is a deal killer for people. I will say that's one of the very first things I do when we talk to our clients and we notice that. Are you willing to put your house up? Because if you're not, then there's a pretty good possibility that you may not get a funding request done. Now, if you don't have a home, one of the questions that we get, well, what happens if I don't have a home? Well, there's nothing you can do about that. But I will tell you, if the bank sees that you have an asset there, and they call it abundance of caution, and they will take that because they figure they're going to get paid before anybody else because no one wants to lose their home. Now, I've never seen anybody forced out of their home. Usually there's been some kind of agreements on pay downs, a workout plan. I have never seen anybody actually foreclosed on their house, and I've been doing this quite some time. Believe it or not, the banks don't make money on this typically, because it takes a long time for foreclosures. They've got to, typically the houses need updating, or it is expensive. They have to pay someone to manage it. It can be quite cumbersome from a bank standpoint. I'm going to pause just briefly here. Okay, so national versus, I'm gonna have to get my shares here. Oops, sorry about that. So the process, we've got three different types of banks, and basically is what they kind of break down to. So you have your national lenders, your regional lenders, and your local lenders. Now, the national lenders would be what you're probably thinking of. You have your Bank of America's, US banks, Wells Fargo's, things of that nature. And these particular banks, they really serve a niche. I would say the majority of them, you are going to get the best rates, lowest fees on these. They have a large deposit base. So you think about all the free checking programs that people bank with them. They have this lendable money. So you can really get some good rates. Now, I would say that, if you're a startup, this is probably not a great place to go. They have basically a matrix. If you fit into these, you can really get fast approvals. But navigating a national bank system can be a little bit cumbersome, especially for a first-time borrower. Now, I would say where the national banks really show their prowess is when you have established history and you fit in that matrix, and it can be a terrific experience. I've worked with them. I worked for a large national bank. It was a good experience. My clients loved it, but it's not for everybody. If you want to go in and know who your lender is, and you may know some of the bank staff there, but the one other good thing is they have a lot of people that act as business lenders for them. You can go into the branches. They have small business divisions. They have commercial divisions. Their loan programs have been around. So this can be, established processes. They really do a good job in this, but I would say, you have to look at yourself, what do you feel comfortable with? Now, how they make credit decisions is kind of interesting. Typically, they will make a credit decision based on what they call a central underwriting. So they will take your loan request, and let's just say I can think of a bank or two. They make credit decisions on the West Coast. So if you're here in Wichita, Kansas, and you're trying to open up a downtown bakery or brewery or something like that, how well do they know Wichita? Is that going to help you when you put in your loan request? They don't probably know much about the area. They're going to pull stats, data, everything, but they may not realize how big of a need there is for a bakery downtown or something. And I'm just using that as an example. But on the flip side, I actually had a gluten-free bakery, one of the first in Kansas City that I financed, and it actually worked out pretty good because they were familiar with gluten-free, while this area wasn't. So it's kind of worked in both ways, but that's something you should consider. Regional banks. So these are kind of like your, I'd say, Commerce Bank, UMB Bank, some of these super regional banks that have a large footprint but on a national level. They too have established processes, loan programs, they have really good rates and fees. They tend to have a little bit larger of a credit box than your national or local lenders. They are wanting to grow. And so a national and local lender may be a little bit more conservative on there. They do have more resources than maybe some of your community and local banks. They may have big treasury departments and merchant processing solutions that maybe some of your local banks don't. Um, they're usually pretty good at decision making. So if you think about some of their the banks that we mentioned, Kansas City, St. Louis area, that's where they're making credit decisions sometimes. You think about Arvest, where they would be in Bentonville. Just kind of depends, but it's not a bad way to go. And a lot of times they may have local decision makers too. So they may have local loan committees. So that's something we're going to talk about in the local part of it. But oftentimes they may have a combination of both. So they may do a centralized underwriting where your package gets sent to an underwriter and they put everything together and your loans either approved or denied. But they may have a local market loan committee, and we'll just talk about what a loan committee is and what it's made of. Typically, it's made of a chief financial officer, president, compliance, and lenders. Sometimes board of directors, people will be on this, but typically about 8 to 10 people. And what happens is your lender comes in and pitches your deal. It's almost like Shark Tank, if you guys have ever watched that. And they make a decision. They've already analyzed all the data. It's right there in front of them, called a loan packet. And the lenders in that room basically trying to convince them that they should loan you the money. And so this is where I will go into the local, but this is where your regional and local banks may have a little bit of an advantage. And you have somebody in there fighting for you. And I oftentimes, as a lender, I almost call myself a trial attorney because you have your jury of your peers sitting around the table and you're trying to convince them that this loan is worth doing. So this is where we're going to talk about your lender and their experience, but I think you're kind of seeing where maybe your lender and going to the right bank. A lot of times your regional and national lenders, they'll have SBA programs that are already in place. That could be a big thing if you're going to be an SBA loan. You want to go to an SBA bank, one that knows how to do it. That's a big deal. We can talk more about that. And then we have local. So flexibility processes are sometimes considered more guidelines. They can definitely be creative, and that's where those relationships and character, they may look at that a little bit more than experience. So your local bank and having those relationships can be really a big deal. Um, they can be creative, they can really think outside the box sometimes. And that's one of the great things about a local bank, or, if you've had established relationships and with them, or, your parents have banked there, that certainly helps, or if they're willing to guarantee a loan, or, somebody you've known for a long time is involved with the bank. Those relationships, don't discount those. Those are really a big deal. Um, as we're kind of talking about, and speed, you may be talking to the loan committee. Sometimes with local banks, they'll have what they call lending authority. So if you have a $200,000 loan, you may be talking to a loan officer that has lending authority. So as a prospective lender, borrower, I would ask him, do you have lending authority, or her? Do you have lending authority, and what's your approval process if not? Instead of trying to convince 8 to 10 people sitting around a table, if this one person has lending authority and they like what you do, you may be on your way. So I think you can kind of see the differences between the national, regional, and local. They're all good places. I think it really just depends on what your situation is. I'm going to pause for just a second because there's a lot there. See if anybody has any questions. We're good on that. So how to find a banker and what to look for. Um, I think you guys are seeing just how important this can be. We run into this at the Capitol Center all the time. Sometimes you'll find a bank or a banker who says, yeah, we can do SBA loans. Well, do you really do SBA loans, or did you do one 3 years ago? And we really want to try to do it, but you hear about some horror stories sometimes of people being, well, I was with this bank for 6 months trying to do an SBA loan. It should never take that long. Well, probably because the bank and the banker did not have experience with this particular program. So trying to find an experienced banker, or I would say maybe you don't find the experience, but you find someone who's passionate about you. I mean, you heard the scenarios just a minute ago. I mean, if you have a lender who's willing to fight for you, believes in you, that can really um, pay some dividends for you. So I would ask peers in your industry, if you're I think about the breweries. They work together. They all know each other. They really have a really good relationships. I guarantee all the ones in Wichita know each other. Well, they, who's financing those deals? What bank was interested in it? I would reach out to people in the industry. Ask, us at the KSBDC, we almost half my job is talking to bankers and finding out what kind of loans that they're looking for. So if you are, wanting to open up a brewery, is XYZ Bank even going to do this? So if not, why are we wasting everybody's time? And we have to keep up. And like I said earlier, they all have specialties. And if you have a bank that likes to do real estate and that's what they're good at and that's all they know, if you come walking in the door wanting to open up a brewery, what do you think the decision is going to be right off the bat? They don't know how to do it. They don't understand. It's a completely different type of loan. So that's really important. Finding the right bank. Look up SBA lending stats and use Lender Match on the SBA portal. That'll give you kind of an idea. But I would always, say, talk to people in your community, your chambers of commerce, your economic development people. They know who's doing the deals around the area. We just talked about all lenders are not created equal. And I think you can see why. More banks are hiring salespeople. They work off commission, so they may be entirely commission based, or they may have a mix of a salary or commission. So sometimes you will hear them say, yeah, we want to help you out with this loan. Well, they're trying to make money, and there's nothing wrong with that, because they are a private business and that's how they get to keep their job. But they may not have the experience as actual banking. And so that's something you need to ask them as a client. You need to say, how many loans have you closed and what type of loans? do you have any experience in my industry? And if you don't, how, does this business plan explain it? Do you get what I'm doing? Because when they get in that loan committee, they're going to get peppered with questions. And if they cannot answer those questions, what do you think your loan approval odds are? Probably not good. So this is something that's really overlooked a lot. Um, do they work for a bank that really is an SBA lender? We talked to, mentioned that once before. I mean, there's banks that really specialize in SBA lending. Not to say that there's other banks that can't do it, but you want to go with someone who gets it, that understands. Um, and are they passionate about their career? Are they on their way out? Are they going to give it their all? Are they a climber in their bank? Are they on the way out and they're just doing it to waste, put a stat on their sheet? Again, I think it kind of goes down, do they believe in you? Are they going to really fight for you in that loan committee scenario? I think that's really important. I mean, does their bank love your industry? Believe it or not, they don't like everything. We talked about that before. Yeah, I just flat out ask them, and the bankers actually appreciate that. If they're a good banker, they'll do it. More often than not, they may know a bank that does like to do those loans, and they'll refer them on. So it's really important to ask these questions. We talked about the compensated, unfortunately, it's the nature of the game. If, as we mentioned, they may be compensated through commissions. If they have $1 million loan and you have $100,000 loan and they get a commission, the natural thing is they're probably going to look at that. So, you may not always get the most experienced person because maybe they're getting looks at $1 million loans and not $100,000 loans. Well, that's something to consider as well. And sales goals, are they being, pressured to push a certain product? I just came across a deal the other day and a bank basically was trying to give them a home equity line and disguise it as a business loan. And they put it in the business name, but they basically were loaning them the equity in their home. And that is not a true business loan. Plus, they were taking a lien on the business assets. I mean, if you're going to do that, why not just go to the bank and get your own home equity line and not have an asset, have a lien on your business assets? So sometimes you have to kind of be careful too, how it's worded. We had a client that supposedly had a commitment letter, and this was supposed to be a non-binding agreement. Binding agreement for SBA. Well, it said conditional commitment letter. So you really have to be careful how things are worded too. And, do they return your phone calls? Are they, active with you? Do they, make time out for you? These are all things that you really have to ask yourself. And for all the people that are in the audience today, I would interview the lender. Don't take the first person. Make sure that this is a good fit for you. Trust me, it'll save you a lot of time and angst if you do this. I'm going to pause right here for just a second. Okay. So credit basics of lending programs. We're going to go over this. And so, people ask me all the time, what's an acceptable credit score? I would say anything over 680 is something that the banks generally will look at. Of course, with anything, the higher your credit score, the better. And I would say it's almost like you really need to be over 700. Now, that's not to say you can't get a loan approved. There's programs out there, but a 700 credit score really, it's kind of like that, if, $20,000 car purchase or a car purchase that's $19,995. the 19,000 one sounds a lot better, right? Well, it's kind of the same way with the credit scores. If you can boost it up, 20 points to get it over, go to Credit Karma or the credit cards, they all have monitoring, go in there. The biggest issue typically is credit card utilization. They will hit you pretty hard on that. But you really want to know what your credit scores are. Again, industry experience, make sure you have that, or look at a franchise, collateral, think about that. What are you putting up? Um, Business ownership history, that's something that's really hard to overcome, but you really have to show how you can transition into this role. And we're actually working with a couple of longtime employees right now that want to purchase the businesses that they're at. And one of the things that we're doing is working on a transition plan. We need to show that they can move from employee to owner. Uh, Secondary source of repayment. We went back capacity. How are you going to pay back the loan? Well, the second thing a bank will look at is, okay, so the business is going to pay back the loan. Well, what happens if the business has a stumbling? Well, sales aren't what they thought. Maybe something happens, conditions have changed. They're always going to look for the guarantor support. And that's where yourselves or anybody else that are guarantors on the loan have the ability to make up any shortfalls from the business income to make that payment. This is a big deal for bankers. They look at this a lot, especially when you're looking at projection type loans where there's no established history and you just have projections. Well, what happens if the projections are wrong or the business isn't performing up to the projections? They want to make sure that there's a secondary source of repayment. So just some tips here for you. Try to keep your personal debt as low as you can. They're going to factor this into your loan request. So if you have a client, they bought a $600,000 house, great, but their mortgage payments are huge now, and it's killing their opportunity to get a business loan because they want to make sure that the personal side isn't going to influence the business side. Well, if you have a lot of cars, big house payment, what happens if the business again does not make it? Then how are you going to make that up? So that is something that they're going to ask. No violent criminal history. That's not to say that people that have had some offenses with the law, there's still opportunities out there. Again, it's typically the violent ones that you see that have a harder time qualifying for loans. Historical verified numbers, we just talked about that. I think this is again where franchises really can be very helpful. They have these. And then fully prepared financial packages ready to go. This is where your mentors, your SBDC can really help you with that. And then you have to be willing to pledge assets, bring equity to the loan request. These are some of the programs that are available. SBA lending, there's loan match programs here in Kansas, there's grant opportunities, there's conventional lending banks. Some of your alternative lending is like crowdfunding, startup engines, there's angel investors out there. Your partnerships, we see owner financing come into play sometimes. Proprietor where they're running the business and they get an equity share of the business for doing this. There's also self-funding. We've seen this a lot here of late where someone asks a question about IRAs, looking at your ROBs or doing a ROBs plan, savings, home equity lines. There's all kinds of different secondary lending programs. There is some out there. I would caution you getting too deep with these. Typically their rates are a little bit higher, but sometimes you have to do what you have to do. will just kind of pause again right here. Looks like we are actually at the end. We've got about 7 minutes to go here, so I am going to open it up for questions. I think we may have another question come through.
Yeah, we have one question. Erica says, any extra tips for loans funded for women or women veterans?
Okay, that's a great question. Unfortunately, there's no specific lending programs that we're aware of for veterans. Now, the SBA does have a veteran lending program, but it's just they will sometimes they'll basically run reduced fees for that. There is some extra funding resources that are, especially right now, they're being rolled out all the time for women and minorities right now. So we're seeing a lot of these programs come on board right now, or they're going to be up and running here in the fall. So I would say there is some other funding options out there. But again, it'd be too much to go through here on this actual program. And again, we have to look at the particular situation, what kind of business that you're looking at. There is a ton of different programs out there, and that's kind of what we do is we look at it and do an analysis of the loan request and see what programs fit you best. And it may or may not be a one specific one. Maybe there's a loan program out there that fits you better, has better rates and terms. But I will say there's a lot of energy around women and minority owned businesses receiving more funding and better programs out there. So I'm really excited about that part. I know at the Capital Center, about 60% of our pipeline here is actually women and minority owned businesses. So that is a very active group right now, and it's nice to see. We've had pretty good success with that.
Somebody also asked, what don't they support, like tobacco or alcohol, etc.?
Let's see here. Okay. Yeah, that's kind of a tough one. Yeah, tobacco and alcohol, they're I think you're probably talking about maybe banks who want to shy away from those industries. We really don't see it with alcohol as much because it's legal. And then tobacco, like smoke shops and stuff like that, that's no problem as long as it's legal. I think the one that we're seeing a lot of mixed results with is the hemp industry, CBD, medical marijuana industries. There's a little bit of a battleground going on the federal level. Those are really hard to get funding for when it comes to marijuana and those type of hemp products. But typical like cigarettes and alcohol, that really hasn't been a issue seeing for funding. I'm not sure if that's exactly the question. There's lenders out there that, this is a good industry to lend to. So typically the profit margins are pretty good with these industries. So we really haven't seen any kind of issue with that. On here, you can see my contact information. This is our website, capitalaccesscenter.com. And again, you can go on to our website. My email address is there. This is our line for the Capital Center. So you can call this number or you can contact your local KSBDC there at WSU or your closest one. if you're not from the Wichita area. So we, I don't know. I don't see any more questions. Oh, might be one in chat coming through. Let's take a look here. Oh, great. Well, Diane, thank you very much for being on there as well. We hope that you found it informative, and please, reach out if you have additional.
Somebody
Yeah.
also said that if the credit score is 740, would they allow it?
Yeah, that's a great credit score. That's really good. I would say that's in you're right on that echelon of being one of the top there. Typically you'll see anything 800 and above is, you just don't see that very often. I would say 740 is a really good credit score. So that's really a good positive. When you have a good credit score, it shows good character, because the bank's going to ask, if you can't manage your personal side, how are you going to manage your business side? So, and they look at that credit score. So that's a really good credit score. I think you're in really good shape on that. Great question.